All right, guys, good morning. Let's do a quick audio check here. Make sure we're, to quote JC, cooking with that gas. But happy holidays, guys. So it is, let's see. I keep thinking today's Thursday. All right, today's Wednesday. We got one more day of work here. But let's dive on in here, guys. So we'll start here with the weekly charts of the indexes. These things are beauties. So remember, if you're buying into the news right now and getting prepared for the end of the world, you're shorting a really strong uptrend. So until this weekly chart shifts, the uptrend here is kicking and breathing. So you got support here at the 21 EMA. We have a weekly squeeze, which you got to love, and you got the stacked EMAs. So great looking weekly structure there to the S&P. If we check out the Q-tips here, I'd argue a little bit better than the weekly chart of the S&P because you have green 10x bars. But you got your squeeze, you got support at the 21 EMA, stacked EMAs, all that good stuff. So until this just breaks, you're shorting at pretty key support here if you are shorting in an uptrend. So I think, as we talked about for the last few weeks here, the short side of things gets so much easier when we actually start to break weekly structure. Here's the only thing that's missing right now. So a lot of times you're going to pull back to the weekly 21, you're going to chop for a bit, then you get the big push. The only thing missing right now is that clean daily squeeze. If you can get a clean daily squeeze inside of a clean weekly squeeze, there's a pretty good probability you're going to get some solid upside. But in terms of the current daily squeeze, it's got a little bit of work to do. So for both the S&P and the QQQ here, I want to start to see a couple closes back above the daily 21 EMA. I want my histogram to start to shift. I need the green 10x bars, but keep it simple. Right? Good looking bullish daily squeeze, I think, is the last piece here before we can get the continuation of the trend out of the weekly squeeze. So pretty much that's all I'm waiting for here. I won't even think about getting short unless the weekly charts just totally shift structure. But I need a little bit more here out of the daily chart. So we got a short week. The markets close on Friday for Christmas Eve. But if the indexes can get a couple closes above the daily 21 EMA and some stacked EMAs here, then I think we're gearing up for the next push towards the upside. So that's my mindset here, guys, until something changes. But I want to show you a few spots I think are interesting. Mainly Apple here, but real quick, let's take a look here at the semiconductors. Even here during the chop fest and all the volatility, your semis have held structure really good. So the ugliest it got here was a move down to about -1 ATR down to the 50. Just kind of more chop than anything. But the whole time here, I'm getting my early buy signals. So the early buy signals communicate to me, things are a little bit volatile right now. Things are a little bit back and forth. But your weekly and your daily uptrend, still very much intact here. And then as I'm running my scans the last couple of days, this has been the consistent theme. A lot of the better looking setups here, they're in the semiconductors. So I do think, if the market makes another leg to the upside, just based on the trend and the structure here, I would look for the semiconductors to probably play a pretty big role. And I think you could simplify it and just trade SMH. But in terms of scan results, all of last week I'm getting things here like Micron. It gaps up after earnings, so I don't think we got to chase it here. But I'm getting my buy signals in the midst of the volatility. Let's see, you got ON. Beautiful daily squeeze. Whole bunch of buy signals there. Then you got Qualcomm. At DMAs, green 10x bars, a squeeze, buy signals. What else is here? LRCX. So to me, that's really important. And keep in mind, if the market rolls over and dies here, then everything rolls over and dies. But if we're still in a weekly uptrend and we're still trying to put together better looking daily charts, well, I'm still going to look for uptrends that play to the upside. And until something changes with the indexes and until something changes here, I like the semiconductors. So Qualcomm is pretty clean. LRCX, ON. But then you got the big fellas. Pretty good bounce here for AMD. We still have a position here, which I like. If I didn't have a position here, I'm not sure I would add to this. Good looking chart and all. It's just not really my setup. There's no daily squeeze. There's no stacked DMAs. Now, AMD should do just fine here if the semis do pretty good. And then for NVIDIA, you got the daily squeeze. Right, so not as clean as a Qualcomm, but I think generally speaking, the group here should be poised to do pretty well, unless the market rolls over. But then in terms of QQQ, and the only thing we need here is that nice and clean daily chart. Right? You get the clean daily squeeze. When you get that on top of your weekly 21 in a bullish weekly squeeze, I'd like me a little bit of that. And I think the cleanest thing here in tech, without a doubt, is Apple, in my opinion. So let's take a look here. Right? You have green 10x bars, so bullish momentum on a monthly chart, pretty much all the way down to a 5-minute chart. So you're stacked with momentum. You pull back to your daily 21. You hold support here. But take a look at this. We're only 3 weeks into firing the weekly squeeze. You got your 3 green dots here. So a good squeeze potentially gives us, 5 to 8 plus bars of momentum. So if Apple goes down, or if the market goes down, rather, down goes Apple. But if everything does hold up here, I think you got a bit more gas in the tank to the weekly squeeze. So good looking weekly squeeze. Pull back to the daily 21. And that could be your launching pad here for the next leg towards the upside. In the absence of a daily squeeze, all we got to do is dial it down to wherever we can find a squeeze. And you got a few here. You got a 4-hour, a 60-minute, and a 5-minute. So what I'm going to look for here today, in the options room and in my mastery, is if we can continue to trade here above the 4-hour 21 EMA, and the market holds up pretty good, probably going to look to build a position in here with the idea that if everything holds up, eventually the 60-minute squeeze fires long. That can then trigger the 4-hour squeeze, and the 4-hour squeeze could trigger the next leg to the upside off of the daily 21 EMA. But here's the key. At least as of right now, we don't have that wind at our back from the indexes. This is still very much chop. We're really stuck in the consolidation mode. Swing trading right now is a little bit different than swing trading when you already fired a squeeze, and the S&P is just ripping towards the upside. So in the the absence of that momentum, at least for right now, what we really want to focus on, are clean setups like an Apple. Then we got to think in terms of risk reward. We really want to make that risk reward work to our favor here. So, for me, if I look at the weekly squeeze, I look at the weekly chart, I think it's got a pretty good shot at continuing, excuse me, so long as we're trading above the weekly 8 EMA. If we end up closing under the weekly 8, then typically that sets you up for a dip down to the weekly 21. So that's kind of going to be my line in the sand here. Call it, 165. So a close under 165. Now maybe I'm not too confident. You're going to get another 3-4 weeks out of the squeeze. You might come back here towards a 21. So if 165 is kind of my line in the sand here, and the target is going to be a brand new all-time high. I think up here at 183-ish, Apple becomes the first $3 trillion company. So the target to the upside would be a brand new all-time high. The exit probably takes place on the close under your weekly 8 EMA. Now the question is, can we risk $100 to make about $200 here? That I think is really important while we're still waiting on some momentum from the market. So if we look at the Apple chain, just for an example here, let's go January 21st. In this instance, we can go close to the money. We can lock in a good premium. So let's go 175 short put, buy the 170 as protection. We'll do one contract. So if you could grab this for, say, $2, right? Already here, guys, it's a good risk reward. Basically 1-to-1. You risk 265 to make 235. My question is, can we lose closer to $100, $115? The cost of entry here is close to 1-to-1. Can we manage it in a fashion where it's a little bit closer to 1-to-2? Risk about 100 and change to make about 200 and change. And the question is, if we're down here at 165, are we going to be able to work that risk reward? So if we analyze the trade, let's see, 21st. So let's say you do a trade like this today, and then Merry Christmas next Tuesday, Apple's just getting spanked down to 165. You guys can see down around 165, we're down, call it $100 and change. And even down towards 160, down about $170. So in other words here, if this trade quickly goes against us, and we say, hey, we're going to cut it on a close under the weekly AEMA, you're down 100 and change. On a trade where if Apple rips here, you stand to make 200 and change. So I like that. We can probably manage this here, risk 1 to make 2. And if very quickly Apple explodes, we're up here at 185. Are we getting a good bang for our buck? Yeah, the premium starts to come in. Say Apple gets uglier a little bit later. First week of January. Just coming down towards 165-ish. Right? Still within the risk parameters here. The loss at that point is still less than the max potential profit. Really important right now, guys, because when your S&P and your QQQ have already fired a squeeze, right, and they're just they're releasing that 8 to 10 day gas tank, different things are going to work. Meaning we're coming out of a market environment here where it's kind of, quite frankly, it's kind of as simple as, hey, wait for a squeeze to fire, run a scan, take a good entry, and you basically print some money. We can, we're kind of susceptible in those kinds of easy markets to start to build some bad habits. And I think one bad habit potentially is that because this market has been so strong for the last 2 years, myself included, definitely, but I think a lot of us have probably gotten away with taking entry, let the position do its thing, right? Sit through a drawdown, let it come against you. And because the market is just so damn strong, 2-3 weeks later, the uptrend continues and you got your paycheck. I think heading into this year, we don't want to so much bank on that overwhelming nonstop momentum. So we still want to focus on the cleanest setups possible. But I think we're going to go into a market here where the key is going to be keeping your profits and working a better risk reward. So I think based on the daily chart, based on the weekly, based on the 4-hour, I think Apple's heading back towards the highs here. But I want to take that trade and risk 100 to make about 200. Try to flip that risk reward in our favor. I think it's going to be really important this coming year. So that's what I got for you guys as far as a watch list. Semiconductors and Apple. There's a lot of other things out there, like a Google, for example. Now, I do think eventually that's such a good-looking 3-day squeeze. That is like freaking beautiful weekly squeeze. And the daily chart, can we get it back above the 21? Can we get the stacked DMAs? Can we get some green 10x bars? Then there's an Amazon. And Amazon's just sitting here in this weekly squeeze, sitting in the 3-day. So all kinds of potential. But you're not going to get anything here until you have a cleaner daily chart. So your daily chart of Amazon, your daily chart of Google, your daily chart of even a Microsoft, pretty similar to your S&P and your QQQ. A little bit of work left to be done. A couple closes back above the 21. We need some stacked DMAs. You need the shift in momentum. That's why I think right now, if you're trying to get long and if your focus is on, tech names, just focus on Apple. There's no work to be done here. You never broke down. You never lost structure. It's still a super bullish setup. Where Google and Amazon and Microsoft, they're just not just yet. So that's what I got for you guys here. Apple, QQQ, and all of this changes if the indexes start to trade well under the weekly 21 EMA here. Otherwise, tune out the noise here, guys. Focus on the structure. If the virus or Biden or whatever it is that people let kind of dominate their thoughts, if any of those things are going to cause the end of the uptrend, guess what? The charts are going to tell you. So if the uptrend is going to come to an end here, there's not really going to be any mystery. The price action, it's going to be pretty obvious. So I think until then, respect the trend, respect the structure, but still be patient. Wait for some better looking daily charts here. But that's what I got for y'all. Let me get caught up in the chat here. Let's see the VIX this morning first, though. The VIX just kind of chopping here. But hopefully that makes sense. Like, hey, if you like tech here, if you think tech's going to rally, just go with the king of the hill. It's already a great looking chart. I like the weekly chart or the QQQ. I can't really sit here and say, yeah, that's the best looking daily chart in the market. Apple, though. All right, let's jump in here. Good morning, Jason. FTNT has squeezes from hourly through the weekly. Ooh. Well, I'm already interested. Yep, weekly down to a 1 hour chart. So let's just start with the weekly here. Very nice. Earnings early February. So uptrend on the weekly chart. Weekly squeeze, stacked DMAs. Great looking 3-day. It all looks pretty good here, Jason. I like it. Let's see, 4 hour. Yeah, there's nothing bad I can say about it. It's fixing to do something here, right? So weekly to the 60-minute, building energy. It's fixing to release that energy. And for me, I just kind of tend to look for the energy to get released in the direction of the trend that brought it into all these squeezes, which is still an uptrend. So I think a really good pick here. But I'm biased, right? You give me a quadruple squeeze, I'm already probably going to like it there. Dr. Steven, Eric, who works here at Simpler, did that for me. So I got no idea how to get that on the charts. I'm just lucky to have a couple good buddies here, a little bit smarter than I am. Yo, HD, good morning. So Cobra, for AMD here, again, I like the whole group. So what I don't think happens is SMH rallies into a brand new all-time high and AMD and NVIDIA roll over and die. So I do think Qualcomm's a little bit cleaner. I think ON is a little bit cleaner. But I also think we're looking for a group move here. And the best group moves take place when your 1 or 2 or 3 biggest names are kind of leading the way. So I think AMD here, we're probably going to print another daily squeeze. I think they're all a good pick. So right now we have January monthly expiration, put credit spreads here with short strikes at 140. So what I would look for to add to my position, maybe a couple more closes above that 21. Would like to see the stacked DMAs here on the daily chart, but we do have a 4 hour. The 4 hour shaping up pretty good. So I think as long as SMH itself can just continue to do what it's doing here, just holding really good structure, I think personally the group here is getting geared up for a move. Hey, good morning, Mr. Warwick. Let's take a look here at Roku. So my only thing with this one is we're still in a weekly downtrend. However, to your point, there's squeezes. I think a little bit more importantly here, there's been a shift of momentum. Red to yellow histogram here on the weekly chart. Weekly buy signal. So though I still think based on a weekly chart, this is kind of downtrend territory. Once you're down here at 2 to 3 ATR on your weekly chart, and then the histogram starts to shift, then you get some buy signals, and then your other time frames like a 3-day, a daily, they all start to shape up as well. I think at the very least sets you up for a move back towards the weekly 21 EMA. So in the short term, if it's a bullish discussion here on Roku, let's still respect the trend we're working with here, which to me is a downtrend. Right? You still have negatively stacked EMAs, red 10x bars, so it's not Apple. However, we just got to look at it from a momentum perspective. Yeah, daily chart's doing a great job too. Red to yellow, really consistent. And look at that, you got a little blue guy popping up here. So your daily chart, not a bullish structure by any means, but a good shift in momentum. 3-day chart is trying to shift momentum. In the short term, Warwick, that's what I would look for to the upside. Nice little reversion to the weekly mean. Then take it from there. Right? Where I think Roku really shows, some grit here, a little bit of oomph to it, is if we get the reversion to the mean, and then it starts to trade back above the weekly 21. Then things start to get a lot more interesting as far as a shift of trend. For now, though, I mean, that's a really tradable move. 225 to 290. That's what I'd focus on in the short term. Then you judge it for the next trade based on what does it do here at the weekly 21. All right, good morning there, Melissa. Thoughts on FCX? Great looking weekly chart. Yeah, you knew I was going to like it. You already knew. So what I like more than the fact that we have so many squeezes, look how well it's held up here. So if the worst that a stock does over the last few weeks is just daily squeeze, +1, -1, to me that says a lot. Let's compare this to, say, a Netflix. Netflix really lost structure here. Like a lot of things have changed here about Netflix as a result of the volatility. Not for Freeport, though. Histogram continues to rise. Not a single red 10x bar anywhere. I like it, Melissa. I think a really good pick here. Holds up really well. Christian, let's take a look at Apple here. Crucial to wait for the histogram to start turning more positive before entering. Weekly looks positive. Daily is still blue, but headed towards the downside. Yeah, good observation. And, this is going to be pretty normal on the pullback to the 21. If we could kind of just hide the price action and just focus on the histogram, we kind of get a better sense of the ebbs and flows. So back here, Apple squeezing. Right? There's your release of energy. So that pushes you off the 21. Now there's, getting a little bit tired. Right? Needs a little bit of a break. It's got to catch its breath here. That typically takes us to the 21 EMA. So in the histogram, that's kind of the reflection there of build up energy, release energy, and then as you lose a little bit of steam, pulled back to the 21 EMA. As long as it holds here, though, now you look for the histogram and start to rise back towards, the light blue, back towards a bit more positive. Here's what's difficult, I think, about waiting for that. If you look at the most recent time back here, if you wait for that histogram to really start to get back to baby blue, it might continue to rally for sure, but a lot of times you're late to the party. Apple's already up here at 2 to 3 ATR. So I think, and not always easy at first for newer traders, but kind of like we just looked at. It's like, hey, this is a great uptrend. It has structure. It has stacked EMAs, but it's a numbers game. So we really have no clue if this is going to be one of, the 70, 75% of really good, clean daily charts that works for us, or if it's going to be one of the 30, maybe 25% that doesn't work. And I think for me, more over the years, I run it through my checklist. If everything adds up, just going to pull the trigger. Just going to pull the trigger. So long as I'm going into it knowing two things. What's my target to the upside? And then where's my line in the sand where potentially things might be changing here? And for me, it's going to be the weekly 8 EMA. Because I'm thinking the weekly squeeze continues. So you could wait until things shaping up a little bit more. Histogram's a little bit more positive. A lot of times, though, by the time you're getting that confirmation, she's already up here off and running. So for me, it's just more so, okay, is the trend there? Is the structure there? Is the entry there? And then if I'm comfortable with the risk reward, I think we just pull the trigger and then let the probabilities play out. It's a great question, though. So, let me know if you know where I'm coming from as far as I get what you are saying, right? And admittedly, by the time the histogram does that, right, there's a lot more confirmation. It's just sometimes it's already a little bit extended. It's already made, call it 50, 60, maybe 70% of the move you're looking for by the time the histogram turns a corner. So this is why I don't wait for the squeeze to fire to the upside. Right? Because your green dot technically means your squeeze fired. Well, where do we get our green dot here on Apple? Basically the whole move from the 21 into 3 plus ATR, it already unfolds before the squeeze fires. So for me, it's much more so find the trend, find the entry, and try to get in a little bit early. A great question, though. How are we doing on time here? We're good. Good morning, Phil. SMH gap. Possibility of a gap fill. Let's see. Yeah, so good question. I think just in terms of the market right now, we want to take anything that's taking place inside of +1, -1 with a total grain of salt. So the gap levels and just things of that nature that I think are really important when we're actually pushing with some trend. I think right here, though, it's more so, hey, this is just going to be a mess. They're going to be up 3%. They're going to be down 4%. But nothing really, nothing materially really happens here until we can get out of the box. So I just think if you look at the indexes, that's kind of my mentality right now. I don't really want to think too much about anything taking place here inside of +1, -1. Where if the squeeze could fire, and now we actually got some momentum, now we actually got some trend, that's where I think, things like a gap fill or just other key levels of interest, then I think we can work with them. It's just, I think for me at least, really tough to work with a lot of things when we really can't get out of our own way here. Shailesh, Adobe. Wow, I haven't looked at Adobe in a while here. So you got your obvious support level here. Let's check the weekly chart. It got pretty busted. Definitely got pretty busted. I think its best chance right now is just going to be support here at, call it 550, call it 550-ish. But to pull back the support is one thing. Bearish momentum brought you to support. Now you need that bearish momentum to basically disappear here. So just one simple perspective is the histogram. So good job here for the 30-minute chart. Red to yellow to blue. So the 30-minute chart seemingly trying to put in a bottom. All right, now the hourly chart is trying. So a little bit of progress here. The 2-hour chart is trying. So this isn't my trade, but that's a little, I think that's a little bit of needed context here. Actually, here's a good exercise. Just studying the histogram, go look at the histogram on a daily down to a 30-minute chart for that most recent push down to support. Right? Notice the breakdown of momentum that takes you into support. And then from a 30-minute chart, ultimately up to a daily minute chart, then look at the shift of that momentum. Kind of gets you going back towards the upside. So I think for the daily chart, still a little bit early here, but you're trying to run it through the checklist. All right, 5-minute chart, fixing itself. 15-minute, 30-minute, 60. Once that starts to hit your 2-hour, your 4-hour, then you might be working with something here. But it's also downtrend territory. So I think if anything here, you wait for that shift in momentum, but then you treat it as nothing more than a bounce back up towards your daily, weekly 21 EMA. But that's a good exercise because I think for a lot of folks right now, very easy to look at a chart, very easy to see previous support, and then very easy, obviously, to see that big push towards the upside. Something has to cause that, though. So in terms of momentum, something has to happen for Adobe to tank like that. And then in terms of momentum, something has to happen for Adobe to start to find some support. And then something has to happen with momentum to get the reversal back towards the upside. So for those of you guys that like these kinds of plays, go study those charts. A little period right there, 4-hour down to a 30-minute, and this is what you're going to see. Yellow, light blue, all over the place. Then I think you got a better chance at getting your reversal there. All right, guys, go through a few more here. My man G, what's up, brother? STX. Ooh, very nice. Oh, hell yeah, look at this. Absolutely. Green 10x bars, basically monthly to a 5-minute. Trend, daily squeeze. Yeah. That's a thing of beauty. And you had a 4-hour, even better. Most importantly, though, what did it do while the market kind of got a little bit sketchy there? Holds up like a total champ. So I would look for the continuation into a new high. The trend, the structure, the momentum, it's all lining up here. That looks really good. I'm going to keep an eye on that one. Very nice. Hey, good morning, Michael. Is Cisco a good swing trade here? Let's see. Yeah, it might be a little bit late. Okay, wait for a dip. Wait for a dip because you missed the easy move here on the daily chart. Mind you, it could continue to rally here. I would just look for any dip you can get. Reason being is even though you fired your daily squeeze, you still haven't fired your weekly. Actually, yeah, wait for a dip here. Think in terms of Apple. After Apple fires that daily squeeze, and you're still teeing up in a 3-day and a weekly, you want to look for any dip you can get, because you want to be there when the 3-day and when the weekly fire. So up there at 2+ ATR on the daily chart, not the best entry here, but if you could get a dip, I would look to take it, because you got this bad boy, the 3-day and the weekly. They still got some work to do. They haven't even started the party just yet. So I'd look to pick your spot wisely there, but a good trend to focus on, I think. PGA swinger. Good morning. XME. Nice. Nice. Quadruple squeeze. Weekly down to a 3-day. Reminds me of the QQQ, meaning, right, great looking weekly trend, great looking weekly squeeze. The daily is starting to heat up here. So I don't know if I would go, 5 days till expiration, because where you're going to get the next, high probability push is when your daily squeeze can look more like this. You're steadily and consistently above the 21 EMA. Histogram continues to shift. So we're getting there. We're definitely getting there. I just think you give a swing trade here, maybe 30, 40 days till expiration instead of 4 to 5. So once you can get a little bit more here to your daily chart, now there's a better chance that daily squeeze fires. When the daily squeeze potentially getting ready to fire, that could go ahead here and trigger your 3-day. And then the 3-day might just go on ahead and wake up the weekly. It's just one I would give time. Give a little bit of time to. Phil has got, yes, Paolo, definitely Phil. Paolo definitely shapes up pretty good here. We have 3-day, 4-hour, 2-hour, 60-minute. More importantly, though, it doesn't budge. So again, think of the chart of Netflix. This doesn't budge at all. So in the event your indexes shape up here, and your S&P, your QQQ, your Dow Jones, they all start to fire squeezes to the upside, there's that 4, maybe 5-week window. You probably got some pretty steady momentum. And while generally speaking, it's good for basically everything, these are the kinds of things you really want to dial into. Because in the midst of the chop fest and the volatility, daily squeezes, daily squeezing. These should be some of the trends that serve you the best if they can get the wind at their back. So put it this way. S&P QQQ rally into mid-January. It's what Netflix probably does, kind of by default. Probably trades higher. But there's no edge here. Right? So this thing kind of crumbled like a punk. It's the first sign of a little bit of volatility in the market. Palo Alto, very strong. Holds up on its own 2 feet. All right, guys, last one here, then I'll cut you loose before the open. Ball T. Let's take a look here at UPS. Good stuff this morning, y'all. Good stuff this morning. Good looking daily squeeze. Weekly and daily stack DMAs. All right, so this gets a little bit weird. Technically, your weekly squeeze is firing. Let's just ignore that. We're for all intents and purposes, we're in a weekly squeeze, which is good. You gotta love that. So, that 3 to 4 week window there where it felt like, oh wow, UPS is going into a downtrend. Like your QQQ, like your S&P, maybe you're just pulling back to weekly support. Kind of looks like that was the case here. So your weekly trend, your weekly structure, very much intact here. There's no technical squeeze here, but the 3-day chart looks good. And the daily chart looks really good here. So let me think. UPS. Yeah, I think UPS has a pretty good chunk of transports, which are trying to do a pretty good job here. So I like it. I like it. Again, I'm going to buy UPS today without hesitation over Netflix. No thought about it. I'm going to buy a UPS because of the structure and because it's held up well here. Realistically, before I'm going to buy Microsoft, there's a little bit more work to be done here. UPS might not be as quote unquote sexy, but it's held up really well. So good, solid stuff there. Good, solid stuff. Yeah, Christian, always my pleasure. Always enjoy these sessions. But guys, I'm gonna cut you loose here. Market up on what time is it? 9:26. Yeah, so market opens up here in a few minutes. But remember, market is closed on Friday for Christmas Eve, so no pre-market prep. We're still gonna get a couple of videos out this weekend, as always, and then I'll be back with all of you here on Monday morning to kick off the last week of the year. So make sure you spend some time with family this weekend, detach a little bit, unwind, because we got a brand new year coming up, and I look forward to kicking ass with you guys. But I appreciate all of you. Have a great day. And for those of you in the options room, I'll see you in about an hour. Talk to y'all soon.